Atlanta's apartment market is just not getting much better. No occupancy improvement, only minimal rent growth despite new supply levels falling. Welcome to Apartment Market Dynamics from MPF Research. I'm Jay Parsons with your Atlanta update. Well, it seems like it's about time to have some good news from Atlanta's apartment market, but there just aren't yet a whole lot of positive vital signs. One thing we can say is that some of the top-tier submarkets are beginning to see some improvement, and that's something we've seen all throughout the south region of the country, the top-tier submarkets leading the way in the recovery. But in Atlanta, even that trend is pretty muted. These top-tier submarkets look good, really only in comparison to other parts of Atlanta. Now let's look at some fundamentals, and then we'll dig into those submarkets a little more, starting with apartment demand. Take a look at this chart showing quarterly apartment demand in Atlanta. You see big net move-outs in 2008, some momentum in 2009, the first half of 2010, but it's really stalled out since then. Nearly 2,000 net move-outs between July 2010 and March 2011. So by now we had thought we might see some occupancy improvement since new supply levels have dropped off so much, but that just has not happened. In fact, overall occupancy climbed above 90% in the first half of 2010, but now it's back below 90% at 89.4%, which is the third worst rate in the country, ahead of only Houston and Memphis. And rents, very little momentum there. In fact, in first quarter specifically, same-store rents inched down 0.2%, but rents did show some progress in the prior three quarters, and so as a result, that brought annual effective rent change to 1.8% in positive territory, but still well below the South regional average of 3.3%. In submarkets, let's take a look at a few highlights here. As we alluded to earlier, the top-tier submarkets are leading the way. In fact, Atlanta's four most expensive submarkets by average monthly rental rates led the way in Atlanta in terms of annual revenue change, which is the combination of same-store rent change and occupancy change. You see in-town, midtown, northwest Atlanta, Chamblee, Dunwoody, and Buckhead all around the 4 to 9% range for annual revenue growth. But we have to put these numbers in some context, especially in the in-town, midtown, and northwest Atlanta areas. Those big revenue change numbers were really driven up by occupancy growth that came from a large number of properties that were delivered in 2009, early 2010. And as those properties just worked through initial lease-up, that's brought overall occupancy back up. So that's really driving up those overall numbers. And for further perspective, in Atlanta, there is not one submarket with an occupancy rate above 94%, and no submarket had annual rent growth of more than 4%. So not a lot of really good numbers for Atlanta. And for further perspective, no submarket Atlanta has seen revenues return to pre-recession levels. So again, just not much good news in Atlanta, and this is the one that's very tough to forecast going forward given that the job numbers have fluctuated a good bit, so we're not sure really what to expect, but we should see some growth in the year ahead. So that wraps us up for Atlanta. Until next time, for Apartment Market Dynamics and MPF Research, I'm Jay Parsons. Thank you for watching.
Want more? Go deeper with NPF Research's apartment market reports. From a national level, down to individual metros, to specific neighborhoods, NPF Research has been providing unparalleled apartment market intelligence to the multifamily industry for almost 5 decades. Learn more by contacting us at 877-284-4938 or visit www.npfresearch.com and click on Market Reports.